Guess what came in the mail? 100 to 1 by Thomas W. Phelps. Now, if you've read the book 100 Baggers by Christopher Meyer, then you will be very, very familiar with this book. I'm so excited. It came in the mail just a couple of days ago. I'm wrapping up a couple more books and then I am on to this beast, and I'll be sharing some gems with you because apparently it contains the secrets to success on Wall Street. So I'll be sharing all of those secrets with you as we normally do. But for the purpose of this video, I'm going to be going through some 3 opportunities that I see on the market right now. Because last week, there were some news articles, some news releases that came out that affected some of the growth stocks that we speak about regularly on this channel. So I'm going to go through all of those 3 stocks, explain why their share price took a hammering this week, and also whether I believe there is still opportunity in these companies. So before we dive into that, please make sure you smash the like button, hit the subscribe button and the notification bell if you want to see more video content from me. If you do want to join my Discord group, the Patreon link is in the description below. You can check us out. I think you would really like the Discord. But with that said, let's dive straight into it. So first stock on the agenda is the amazing Celsius Holdings. Absolutely love this company. I love the management. I love their branding. I love their marketing. I love the stock. I love the products, even though I haven't been able to try out the product just yet. I just love everything about this company, okay? The only thing I don't like is the PE ratio. The PE ratio is a bit nuts, okay? So this company is expensive. However, it's expensive for a reason. It's a high growth company in an industry, which is the beverage industry, more specifically the energy drink sector. I mean, that sector has been blowing up. You know, Monster has been the best performing stock over the last couple of decades, and it's because of the industry it's in. And Celsius is making a dent, but their USP or their unique selling point is that they're able to harness the energy side, but combine it with fitness and health and well-being. And we all know we're in a generation where a lot more people are more health conscious. So Celsius is appealing to that market, okay? So they're pretty much attacking both markets and merging it into one. Fantastic. Absolute disruptor. And as a result, we are paying a high price. But the share price did take a bit of a hammering. So it had that correction from mid-February, just like most high growth small cap to mid cap stocks did. And we started buying in the 40s. And then it did have a run up all the way to about $64. And then it pulled back again before tax day. And we're able to pick up a lot more shares. So post tax day, this stock has been on an absolute tear, going up over 77% from when we were buying back in May. However, if we zoom in closer, you can see on the 5-day chart, the stock has dropped from its highs. So from its 52-week highs, which it set on Tuesday, the 8th of June, the stock was down by almost 25% just 2 days later on June 10th on the Thursday. So this, of course, is alarming, but it's for very good reason. And the reason why the stock took a beating like this, they announced a stock offering, okay? So the headline is Celsius Holdings down 9% after proposing a stock offering, okay? So when the news initially dropped, the stock was down 9%, okay? They gave us a bit of information about the offering itself, but at that point, they hadn't provided us with an offering price. So the price of the offering came out the very next day on June the 10th. And the headline was Celsius prices equity offering at $62.50. This sent the share price absolutely tumbling on the very next day. So that was on the Thursday, June the 10th, and it actually traded lower than its offering price. So as you can see here, it reached lows of $61.88. So way below the offering of $62.50. And since those lows, the share price has slowly started to rise again, and it actually ended on Friday at market close up 3%. And the reason for this was because Credit Suisse pretty much called this a buying opportunity. Okay, so Celsius Holdings shoots higher as after Credit Suisse calls out a buying opportunity. And I also called this out to my Discord way before Credit Suisse actually called this a buying opportunity. And I'm going to share with you what I shared with my Discord. So here are my thoughts. So I said on Wednesday evening, the 9th of June 2021, Celsius management announced a stock offering of 6.5 million shares. Okay, I shared this news almost instantly with GW members in the Celsius channel, so that's a quick plug. If you want to be part of a Celsius conversations that we have in my Discord, the Patreon link is in the description below, and we do have a Celsius dedicated channel. So the share offering was priced at $62.50, which I thought was an incredible price, considering the stock was trading at all-time highs of $83 at the open on the prior trading day. Okay, this resulted with Celsius dropping approximately 25%. However, if you observe the longer time frame, the stock had indeed rallied more than 90% in just 4 weeks. So this pullback was needed, in my opinion. Now, to the share offering itself, investors seem to have misunderstood this offering and the glaring bullish signal. Okay, of the 6.5 million shares, it turns out only 1 million of those shares will be new stock issued by the company, which means that based on the current float and the shares outstanding, the actual dilution to existing shareholders is only 1.5%, while the other 5.5 million shares are being sold by the whale, so large insiders, who has owned the stock for many years. Okay, so by my guesstimate, so I was guesstimating, this whale is DeSantis. Now, if you've looked into the share ownership or the insider ownership of Celsius, DeSantis, his story is incredible, to be honest. And I've shared the story with my Discord as well. And the guy became a billionaire just off investing in this one company. So he's a whale. Whose incredible Celsius stories I've shared in the Celsius channel, and probably a few other insiders. Okay, so regarding the amount of shares they will be offloading, that would represent only 10% of their current holding. So this tells me they are still bullish on the company. And with the rising institutional interest that we have observed over the last few weeks, including a recent analyst upgrade from Credit Suisse citing this as a buying opportunity, then I shared the link. Institutions will be absorbing these shares, and it wouldn't be a surprise to see Celsius trading at all-time highs once again. Okay, so these are my findings. And immediately after I shared this research, Celsius posted a 424B5 filing, and that pretty much detailed all of the insiders that will be selling their stock. And like I correctly guesstimated, you've got here Carl DeSantis. He was sitting on 22 million shares, and he ended up uploading 2.3 million shares. And you had other insiders as well that were offloading these amount of shares. So like I said, it was only 10%. We are hardly getting diluted from this stock offering. So I shared with my Discord community that this might be a great opportunity. Again, I'm not a financial advisor, so I can't tell you what to do. I can't tell you to buy or sell. But this is an opportunity to at least have Celsius on your watch list in case you missed out when it was in the 40s. So definitely make sure you have it on your watch list. Again, I'm not saying buy or sell, although Credit Suisse is calling this a buying opportunity. So next up is Hims and Hers Health Inc. Ticker symbol is HIMS. And we were buying Hims around $11, but it was trading as high as $24 a share. It also suffered a drastic pullback from mid-February, just like Celsius did, just like Tattooed Chef did, just like Palantir did. I mean, it was down at one point minus 66% off its 52-week highs, which was crazy. I saw this as a great value, and I started buying on the rise up. So I started buying around $11, and since its lows post-tax day, the stock is up over 49%. But if we zoom in a little bit closer, you can see here that the share price did take a bit of a nosedive this week. So again, around the time when Celsius took a nosedive on the 8th, and of its 5-day highs, it ended up the week down 20%. Now, what happened with Hims? And this is very, very important, and shareholders need to be made aware of why this happened. There were two main reasons. Okay, the very first reason why this happened was because Hims announced that singer Miley Cyrus will join Hims and Hers as creative advisor, and I'm joking, I am absolutely joking. This was actually great news, okay, because this will help boost the reputation of the Hers side of the business. So this was actually great news that came out. So this wasn't the reason why the share price tanked, okay. I'm not a big fan of Miley Cyrus, but she does have a key influence, and I think she'll be instrumental in bringing more eyes to the Hers side of the business. But let's get serious now. The main reason why the share price tanked initially was because Amazon Of course, Monopoly Amazon. Of course, they launched the Amazon Care just a couple of weeks ago. I think it was a couple of months ago. But essentially, Amazon announced that they have signed up multiple companies to its telehealth service, executives say. And immediately this came out, the likes of Teledocs, the likes of Hims, they tanked. Okay, the share price absolutely tanked. This wasn't good news for the telehealth service industry, but I did think that was a bit of an overreaction from shareholders. And of course, once there's a lot of fear and panic in the market, that's when my eyes lit up and I started buying a bit more of Hims, because nothing about the Hims business changed in my opinion. Their target audience are more for the millennials, all right? Where Amazon's Care is going to be more broad-based, but Hims separates itself by being more target-focused, and I like their brand as well. So this was one of the main news articles that came out that affected Hims stock over the week. And on top of that, we found out that the Russell US index have made a few corrections. Okay, so they listed a few stocks that would not make the index this year. And as you can see here, guys, Hims will be deleted from the Russell 3000 due to failing of voting rights. Okay, so this wasn't great news. And of course, that piled on top of what Amazon announced this week is what caused Hims to take a nosedive of over 20% to end the week. Now, I shared this with my Discord. So again, we have a Hims channel in my Discord, and I said this was my thoughts on it. Funnily enough, I was just reading a chapter called Destination Analysis, and the premise focuses on how the retail investors holding Horizon has dropped from an average minimum of 6 years in 2000 to recently, where research shows an average of just 1 year. The author argues that this short-term speculative holding period has replaced the wisdom and rewards of long-term investing. Rather than focus on the short-term noise, false stimuli such as analysts quarterly earnings per share, etc., we should instead ask ourselves, what is the intended destination for this business in 10 to 20 years? What are the steps that our management are taking today to reach this destination? So I feel this is applicable here. Yes, we have been omitted from the Russell 3000 index for now, but this doesn't retract in any way our growth as a company. That's my thoughts, but I'm happy to discuss other thoughts. Okay, so that pretty much summarized my whole feelings towards Hims being excluded from the Russell 3000 index, and also the news of Amazon. It doesn't detract in any way from Hims as a business. And yes, I did help myself to more shares of Hims. I alerted my Discord that I picked up 50 shares of Hims at $12.87. So that was when Amazon made the announcement. And further on, I used my profits from all of my day trading during the week. I used half of my day trading profits to pick up an additional 50 shares of Hims at $12.66. Okay, so because I do day trade every once in a while, I do day trade, and I use all of my day trade profits to invest in my longer term, higher conviction companies. So that's it with Hims. Now, last up is GoPro. Ticker symbol is GPRO. Investors, I have spoken about GoPro when it was $8. I told you about GoPro when it was $9, when it was $10. And here I am again. The stock price is $12.59. I am still banging on about GoPro. I am up over 35% on my position, and I still think that this company is being mispriced right now. The market cap is still sub $2 billion with a price to sales of 1.98 investors. That is insane, okay? With a forward PE of 15.74. This stock is still cheap, okay? This stock is still cheap. Let's take a quick look at their income statement. I mean, revenue, trailing 12 months revenue is just shy of $1 billion. So their trailing 12 months revenue is catching up to their market cap. What the heck? That is absolutely insane, okay? And, their balance sheet isn't too bad. They're sitting on $296 million in total cash, with total debt of $281 million, and their current ratio is 2.39, with a positive operating cash flow of $136 million. GoPro recently presented at the JP Morgan's Global Technology Conference, and I went through the call transcript and I shared with my Discord a few pointers that I really liked, okay? And one thing that Nick pointed out is that they expect to launch a new product this year, and he says we're pretty good at blowing people's minds year after year after year after year after year. It's like what we do. So we're going to do that again this year. We are really excited about that. So as of right now, they still haven't announced what this new product launch will be. But I can imagine as soon as they announce it, the share price is probably going to take off. Again, it's not financial advice. I think this will stir up enthusiasm amongst shareholders, also amongst Wall Street. But of course, remember, the early bird are the ones that catches the worm. Okay, so definitely GoPro. Put it on your watch list if you haven't already. I've been telling you about this stock when it was $8, $9, $10. It's now $12, and I'm still telling you about this stock. I still think it's incredibly undervalued. So that's it in this video today. I hope you gained a lot of value from this video. Please make sure you smash the like button if you did gain some value. If you're new to the channel, hit the subscribe button and the notification bell if you want to see more video content from me. Thank you so much for watching, and I'll catch you in the next one. Peace.